So my next guest is an active fund manager. So along with, just being involved in this market minute to minute, he also is really accountable minute to minute as well. So he keeps his head on the swivel. Want to bring in Bell Point Chief Strategist David Nelson. David, so, last week you were optimistic, but you had one caveat. And you said the 10-year bond yield above 4 would make you a little bit nervous. It crashed through 4. It went through 4 like a rocket ship.
It did.
We're holding in pretty good, although since the show started, we've started to kind of fall apart here a little bit. I'm not sure if there's any news out or it's just sort of anxiety. But we're above 4. Is that starting to change your mind?
No, it doesn't change my mind on the market. It just makes it a little more difficult. And that's the narrative this week. You've got 10-year yields starting to live above 4, and that's a little more important. Yet the Fitch downgrade, I kind of pushed that aside in the sense this was the gang that couldn't shoot straight. They didn't get it right in the financial crisis. They're not really telling us anything we don't know. But it is a stark reminder that, in a short time, at some point, we're going to be paying $1 trillion just to service the debt. So,
in a way, it's a public service, though, right? I mean, we kind of know, but we're not taking it seriously. It's like someone who is obese for years and years and years and says, "I know I'm obese," and then all of a sudden it's too late, right? We know as a nation, everyone knows something is wrong. You look at the right direction, wrong direction. 65% of the country think we're going in the wrong direction. People don't always have all the answers. Everyone's not a PhD, but we know instinctively we're doing things wrong. So it's kind of good to hear someone sound the alarm.
Somebody sounds the alarm, and I guess it's going to have to play out with the electorate.
I hate to say it, but I think the worst case scenario eventually will happen. I don't think that we have the ability, our elected leaders don't have the ability to do the right thing. And to be quite frank with you, we keep reelecting them. So ultimately, it's on us.
And in part, it's on us because the elected officials can't touch the elephants in the room, and that's really the problem. If we don't do something,
they can touch them if they want to be in D.C. for one term. Really, a lot of them talk a good talk.
It may be the only thing that solves our problem.
It might be the only thing. Political will, even if it means falling on your political sword. That might be the only thing that can do that. Only people fall on the political sword now over mean tweets. How about falling on your political sword to save the country?
That would be the right thing to do. Unfortunately, these people want to stay there for life, and if we had term limits, would certainly be an answer for that.
So interesting. Just some breaking news. I saw Dianne Feinstein. She did agree to a daughter being power of attorney, but she won't leave the Senate. So she's acknowledging.
It's egregious.
Right.
I don't even know what to say about that.
This morning, the jobs number. Could you consider that Goldilocks, or was it a little bit too high?
What was it, 187,000? If you take the revision last month, that's kind of in line. If the Fed is truly data dependent, they should look at that and understand that their job is mostly done. And if they push higher than that, they could cause bigger problems.
Earnings season. How are you feeling about it? We're about 3/4 of the way. Yeah.
Yeah, I would say in the Magnificent Seven, we're batting 500. Got some big winners out there. Amazon was just outrageous that quarter. I'll actually add to that at the close today.
Why are you waiting for the close?
I always trade at the close.
Oh, okay.
It's the only rational trade of the day. If I try to do it in the morning, it's too emotional.
I remember for a long time that buying at the close was made all of the money. Buying at the open lost all the money. I don't know if that trade was broken, but that's the reason I think
it's the only one where I know I'm going to get a fair price, because when I trade during the day, the market makers take advantage of me.
Wow,
at the close, they can't screw me around.
I love that. That's something we learned something there. Having said all of that, were the estimates so low? That's one thing that a lot of bears always get upset when you talk about earnings coming in great. They say, well, the bar was lowered.
The bar is always lowered, and it's a game. Let's face it, we understand it's a game. It's also a report card on how good or bad the analysts were at getting the number right.
Well, their report card don't look too good. Less than a minute, less than 30 seconds to go. No one's talking crude oil. Everyone came on the show before all year long and loved it. Is it just because it's had so many false starts and pulled back?
I think that's it. We're not in the 60s anymore. We're above 82. That's the highest level since late last year. So the earnings have troughed for these companies. We're going to turn. Most of the earnings are going to be up next year.
So you've got to have exposure to the oil patch.
You got to have it. If it's not the XLE, some names like ConocoPhillips.
ConocoPhillips, love it. Great. Have a great weekend, David. Always appreciate you, man.